BIGY is the YieldMax Target 12 Big Tech ETF. This is a synthetic income fund designed to capture the price movement and volatility of major tech stocks through a structured strategy of derivatives, primarily option contracts. BIGY's goal is simple: generate high income from the giants of tech without requiring investors to buy each individual company. Let us break that down in plain English. BIGY was launched in 2024 and is part of the YieldMax Target series. That means it focuses on a specific theme, in this case big tech, while aiming for double-digit annual yield, sometimes 12% or higher. The fund is actively managed and uses a synthetic covered call strategy. That means it holds no actual shares of tech companies like Apple, Microsoft, Nvidia, or Amazon. Instead, it uses a combination of equity swaps and call options to mimic the returns of a big tech portfolio. Think of it as a shadow version of the real thing. You get the income potential without owning the stock directly. So what exactly are you getting when you buy a share of BIGY? As of its most recent structure, BIGY tracks the performance of a custom blend of top-tier tech companies. The portfolio includes synthetic exposure to names like Apple, Microsoft, Nvidia, Amazon, Meta Platforms, Alphabet, Tesla, Broadcom, and even Netflix. These are the dominant players in the modern digital economy. BIGY uses options on a rolling monthly basis to generate premium income. It writes out-of-the-money calls, collects the option premium, and passes that cash flow back to shareholders in the form of monthly dividends. That is what gives BIGY its high yield. As of now, the fund's dividend payout has hovered around 0.15 to 0.20 per share per month. That equals $1.80 to $2.40 per share annually. With BIGY currently priced near $20 per share, that is a yield in the ballpark of 10 to 12% annually. For investors seeking weekly or monthly cash flow, this can be extremely attractive. Let us talk numbers. If you owned 100 shares of BIGY at $20 each, your investment would total $2,000. With a 12% yield, that means you would receive about $240 per year in dividends. If you had 1,000 shares, you would earn over $2,400 per year. And all of this income is coming from option premiums, not from stock dividends or bond interest. But that income comes with a trade-off. The biggest downside of synthetic ETFs like BIGY is called NAV erosion. That means the fund's share price tends to drift downward over time due to the option strategy. Because BIGY sells calls every month, it gives up upside growth in exchange for income. So in a bull market, it will underperform. In a sideways or choppy market, it might outperform. And in a bear market, it will still fall. For example, if Nvidia or Meta explode to new highs, BIGY does not fully benefit. It collects the income, but misses most of the gains. On the flip side, if the tech sector trades flat or slightly down, BIGY can still generate solid income without losing much value. That makes it ideal for investors who care more about monthly cash flow than long-term growth. Let us cover fees. The expense ratio is around 0.99%, which is high compared to passive ETFs like VOO or QQQ. But for an actively managed, option-based strategy targeting 12% income, that fee is considered normal. Now let us break down my meter rating. On income, BIGY gets a 10 out of 10. It pays monthly and targets 12% annually. On growth, it gets a 5 out of 10. You are unlikely to see big capital gains due to the covered call strategy. On risk, it gets a 6 out of 10. You are still exposed to market downturns and NAV decay. On simplicity, it gets a 7 out of 10. It is easy to buy, but the synthetic strategy is complex under the hood. On sustainability, it gets a 6 out of 10. As long as the big tech sector remains volatile, BIGY can keep generating income, but long-term NAV erosion is something to monitor. Final score, 7.5 out of 10. BIGY is not for everyone. If you want steady dividend checks every month and are okay with minimal capital appreciation, this ETF might be the perfect fit. But if you are looking for long-term growth, BIGY works best as a complement to your core holdings. Use it for income, not for wealth building. If you have any videos you would like me to cover, say it in the comments below and I will break it down in plain English.